What's up, everyone? Welcome back to the Mortgage Heroes Weekly Podcast. I'm Andy.
I'm Brian.
And this week, Brian, dude, you're like swinging for the fences, bro. We got another great case study of success in the market right now. But this one is a first-time investor. Yeah. So take us through the story. What kinds of things were like barriers for entry? What were the questions these people were asking? What were the things that were maybe like keeping them up at night along the way, and like what was the solution, man? Let's get into it.
Yeah, definitely super excited for this couple. Luckily I was able to connect with them a few weeks ago, and they came to me after finding this property at an open house, or searching through properties at an open house weekend, and essentially the first thing that we always like to ask them whenever, they're first-time buyers, first-time investors is, what challenges were they facing when trying to buy their fix and flip? Initial doubts, uncertainties, and fears, that FUD that we talk about. And essentially, the first thing that they mentioned was fixing and flipping properties had always been a dream of her and her husband. But they didn't really know where to start. So the first challenge was actually learning the process and knowing how the business side of things worked. After they got a little bit more education on how things would work and what it is that they needed to do to be able to put themselves in the position to take down the first flip, the next step and the next challenge that they shared was actually pulling the trigger and really just committing to the decision and saying, hey, like, this is what we want to do. We've been thinking about it for some time now. They're an older couple. They are here from Chula Vista, local, and they said, you know what, like we have to move forward. They did get a mentor, which is one of the things that I thought was very very smart. So they knew right off the bat to align themselves with somebody that is already doing what they wanted to do, learn firsthand from them, and then he's right now in the process of helping them, basically, get through the whole process of, A, B, Z, and all the way through Z, so that they could get the project and then exit out successfully.
Yeah.
So one of the biggest things that their mentor told them was, don't get into analysis paralysis. And that's when things really just clicked for them, that they had their decision made. They knew that they wanted to move forward, but they weren't necessarily really, committed until they really, got the confidence from their mentor and they were able to, pull the trigger. So once we got them basically pre-approved, they were on their way to get everything rolling. And the biggest things for them was, doing the homework. And they did all that. We broke down the numbers. They had the money. The monthly payment was everything's checking out. But for them, it was really just a step forward and to be able to start their own, flipping business. They're both retired. They're just, now doing this for a living. And they really, really wanted to, learn the process before really diving into this. And I think that's what they were able to figure out through the initial steps.
So you were talking to me about this before we hit the show today. You were talking about the calculated risk.
Yeah.
Like, I know that there's risk in everything that we do, and there's risk in doing nothing too. So tell a little bit more about what are the things that are part of a calculated risk right now in the market, then that maybe are absolutely worth. Well, first of all, the things that are absolutely worth considering for a calculated risk are set in stone typically, right? What are some of the things you think that people should be aware of now that should be added into their calculated risk assessment that maybe they're not thinking about?
Yeah, so one of the biggest things when taking on a fix and flip is that you're going to have holding costs. And one thing right now to keep in mind is that if you're following the trend of how houses have been selling, they've been staying on the market for a lot longer than we're used to. So that's something that I feel that needs to be calculated into your calculated risk. And that simply means knowing that you might have to hold on to that property a little bit longer than you're used to. And then that might, mess around with your profits and your numbers a little bit. Doesn't mean that you can't get the project done. You just have to account for how the market's performing right now to really be able to, calculate that risk.
But so talk through that a little more specifically though, because if you're saying that you might have to, if you're saying you got to factor in your holding costs and it might take a little longer than possible, why does that still translate into a yes on the buy? Why would someone still do that even if it's going to take a little bit longer?
That's a really good question. I feel because in this case, what they said that, yeah, there's uncertainty in the market, but in their perspective, they don't believe that buying a property is a bad decision, no matter what time you buy it, right? And that's when I was like, dude, you guys understand the concept of what you're doing here. It's not a long-term, it's not a short-term play, but rather, like I said, to start to a new beginning that's really going to help them, take down more projects down the line.
Yeah.
But I think that was it. Them knowing and understanding that, whether they buy now, buy later, it's not a bad decision financially.
So I'm glad that you clarified that. And there is a reason I asked the question, which is that there's on-sheet risk that's calculated and there's off-sheet risk. What risk does this pose to me in the numbers of the deal? And then what risk does this pose to me as an investor, as a person holding real estate? Is this beyond my, let's say, tolerance limit or the threshold I have for my own risk that I'm willing to put myself out there for? And then can I tolerate that? Meaning not just tolerate attitude, like am I being impatient and grumpy?
Yeah.
I mean, well, can I actually tolerate this in my life? You have to think about other things. Like if you have a regular job and you're also trying to do this, can you contain the requirements that are going to be put upon you in the process of doing a flip like this? Yeah. If you can't, be real about that with yourself. If you can, and you've got extra capacity, a little more flexibility in your work, you can kind of be selective and pick and choose kind of your lane and how you do this. Those are all great things that are going to help you in the end. But I wanted to make sure that I bring it up because a lot of times, even in YouTube space, it can be, oh yeah, well, if this pencils out, it pencils out. I've said it here too. Well, that's fine, because if the deal pencils out, it pencils out in an underwriting perspective.
Yes.
But does it also pencil out in your personal life? Does it actually work for you? And even if it's just for a short-term period of time where you have to endure, well, cool. Can you admit to yourself and then handle what you're going to have to endure for that period of time?
Yeah, and that's a very valid point. And a lot of the, the investors that I meet that are, looking to start their first project when we go to networking events or where we're talking to them online is that, the biggest thing is that when you're taking down your first project, you're essentially taking down the project, but at the same time learning a new business. And that could be the stressful part of that process, because getting the financing is, fairly accessible and easy in a gist. But actually when you get the money, oh crap, first draw, now the project's in motion, things that weren't calculated because, you can't account for things that happen in construction or how you would then tear something down and then something comes up. So those are all the things that you're going to have to learn through the School of Hard Knocks. And by doing it is the only way that you're going to find out, what to do better or what to account for even more next time. But, the biggest thing is just understanding that, there's going to be uncertainties in certain aspects for the flip, but as long as you do have a plan that you're guiding yourself through, you're going to be okay. And as long as, you have your numbers and, and underwriting things cleared, then, you're going to walk away with some sort of profit or just a very good lesson learned.
So in this case, what were some of the concerns that they were wrestling with during the process of this? Yeah, I know there's no super squeaky clean 100%, no wrinkles kind of process. So what were some of the things that they were concerned about in embarking on this journey?
Yeah, so right off the bat, what they said was the biggest concern has been making sure they had a good deal and the house would actually sell. And then they mentioned there's a lot of uncertainty in real estate right now, but you can never go wrong buying a property. So it was the appraised value on the exit in the ARV after repair value that they were worried about to see if it was even going to come in at the value that it would make sense for the deal to stay under the 75% ARV rule. They basically they were banking that the value came in, and we actually did get it at $920, and they purchased the property for $645,000. They came in with 17% because of their loan to cost numbers were a little bit higher, so they came in with a little bit more down payment. But typically, if you're a first-time investor, you're coming in with anywhere between 15 to 10%, and luckily they were right there in the middle. But after that, once you have 3-4 deals under your belt, you can come in with as little as 10% down.
So I want to make a point in this kind of section of our conversation today because, uncertainty is kind of this thing that's being thrown around very liberally these days. Mm-hmm. And a lot of headlines and a lot of conversations and a lot of talk shows about real estate and money and tariffs and taxes and inflation and all this, and uncertainty abounds. But despite there being uncertainty, people are still doing this. And it's kind of a story it's like a cautionary tale because we can allow uncertainty to prevent us from taking right steps that could be helping us financially, or we can pursue and overcome that uncertainty and still do this. Yeah. And what I love is that even in the market, no matter which way you see it, and you're finding me and Brian talking about this today, whether you think it's good, bad, neutral, or otherwise, there's still people doing this and it worked out in their favor. So I'm going to say it as a delicate reminder, because I'm pretty heavy-handed about this sometimes. This week, it's going to be a delicate reminder from Uncle Andy. You can still do a good thing in this market, real estate-wise, financially.
You can. And I mean, there's still a lot of opportunity. I mean, from the people that I'm talking to, I feel that even more now compared to last year around this time, it's a lot more active, and a lot more people are in the mindset of, wanting to do something in real estate space because they've acclimated to the type of market that we're living in right now. And they're starting to, at least the ones that really are on it and in it to win it and want to make deals happen, they're still out there hunting, and deals are still being made. There's still, clients even on the residential side getting credits on deals. So it's really a time for you to get in there and see what you can get, because you're going to get something.
Yeah, and please remember, because we're now in this space where we actually have this case study like you're talking about today, but there's people around us that they're active investors all the time. Like that's their job day in, day out, is they buy real estate and they invest in real estate. And there's always life happening in and around the houses around you. Mm-hmm. It's death, divorce, you got an estate sale, upsizing, downsizing, et cetera, like there's other things happening, not just the market factors at play. And so some people may not want to sell, but they're going to have to.
Yeah.
If there's an old property that's 40 years outdated, that is got clutter in the front yard, the weeds are up to your eyeballs, there might be a deal and a hidden gem underneath all that, even though it takes some elbow grease, a lot of hard work. But that's what investors are out there looking for. Mm-hmm. So just remember, no matter what the market might be looking like or feeling like or whatever the headlines are saying, there's still people in and around San Diego that they're going to be selling or offloading their property because their life is requiring that. Like that thing that they're dealing with is the number one priority, not the interest rate, not the price of the house, not the tax, this or, whatever. I was thinking of capital gains.
Yeah. That might be going a little bit.
Their situation is actually the reason they're having to do this, not their economic choice, I guess is the best way to put it.
And I stay in the west part of Chula Vista, and just in that area, you're starting to see a lot of construction, a lot of development. There's units right there being built by Chula Vista Mall, and then on the corner, all the way down from Moss, once you get down to the freeway and the trolley, they have another development in there, and that one's actually, I think, through the Lennar Homes. So they're putting up a whole bunch of apartments there, and that's just to let you know that they're building and things are still progressing regardless of the market. And I think that's the lesson in this whole situation, is that there are the deals here to be found. You just have to go out there and do the little work, do your little research, really be meticulous about how you're submitting your offers, because right now, if you're a buyer or an investor, you're in the position that you can leverage a lot of these situations because there's a bleeding neck or a big motivation on the other end, and you just need to go and unlock that.
So check this out. You're mentioning all this new development on the west side, right? Those who live in San Diego, South San Diego specifically, you go down the toll road of the 125 freeway.
Oh, yeah.
And there's a ton of grading happening. There's earth movers. They're grading new tiers of a new community that has yet to even break ground, or not break ground. The first nail isn't even in yet.
Yeah.
So what does that say to you if the developers and builders in the area are building new units for sale? If more supply is coming on the market, why would they be doing that if they thought there was no demand for it? Now, translate that to us as an individual investor or a small group of investors if we're syndicating funds and buying 2 units or 4 or 5. Well, the big players in the space are indicating there's ton of demand still that supply needs to meet. And there's, I'll say, a fair amount of runway left for you to do this in Chula Vista or in San Diego at large.
Oh yeah, 100%, and it's very accessible. You really, honestly, like the way that I see investing now in real estate is almost as if you're basically, trading stocks. I mean, it's not the same thing, but the accessibility of it, of being able to buy a stock on your phone. Now you can, find a group and you could connect with them. If you don't want to go 100% on your own, there's different ways to, get skin in the game. And you can even buy like ETFs for real estate if that's something that you're into as well. But the point being is that there's way more accessibility in being able to get started in real estate investing than you really believe. And I think that's the power of this, that, a lot more information is available to people that before this was literally like a myth or something that was so far unattainable. Now you can actually do it on your own, and it doesn't have to start with millions of dollars.
Yeah. So I want to talk about like how did you enter into the picture here? Let's talk about like a little bit of the details of the deal because they ended up coming our direction. You helped them get this thing done. So you mentioned how much the price was and how much they put down. So let's talk about the experience, what solution was there for them, and then like overcoming the challenges because that's part of everything too. It's like again, in the idea of becoming an investor and owning real estate, it's like, oh, I think about all the good things, and you have to like actually do the hard work too, and like overcome the challenges, or I'll say cross the hurdles that come in underwriting. So, what are some of the things that were kind of confronting you and standing in the way of this getting done?
Yeah, so I was referred to them by an agent that actually was a past guest here at Friends of Mortgage Heroes, Juan, and he referred them over to me because he had actually met them at an open house as they were looking for houses at one of his listings, and so he was able to acquire that property for them, and then give them the opportunity to be able to take it down as their first investment deal. But what I asked them in this situation was, what was the experience working with us, with our team, and what solutions did we provide to help? She mentioned the experience working with Brian and his team was amazing. Being able to work with a good team has been very important to us, especially if we're doing it, especially doing it for the first time. And my biggest goal was being able to explain things to them that might be foreign for their first time listening to it, and really breaking down the numbers so that they understood what they were, as well paying and how much they were going to estimate in their profits. And, she mentioned Brian explained everything thoroughly and clarified all the questions we had along the way. I also really appreciated his prompt response and even giving us recommendations on some of the things we needed to put into our application. And
so some of the people who might be listening right now and they're like, well, what are those things? So I think the procedural part of some people listening go, oh yeah, I got to fill out an application. But hold on, filling out the application is just more of an act and it's just a thing you do. But like what you do before that really matters. So what are some of the things you had to work on them with so that this was like a airtight deal? So
a lot of people may not know, but when you get a investment loan, you can't close under your personal name. So they were starting from scratch. They didn't have a corporation. They didn't even have a bank account for that new corporation. So this was all something that we did in these 3 weeks of process. They opened up a bank account under the new LLC. They had to apply for the LLC. That was a process in itself. They got their EIN, Articles of Incorporation, Operating Agreement. They got all that stuff together. They submitted that. So this was the homework before we were able to actually submit the loan to get fully approved and get underwritten so that they could get their funding. So it was really doing all that, getting their corporation in line, having their bank statements or their verification of deposit because they didn't have bank statements, and that's something that they're going to always verify because a lot of these loans are asset driven. So that was the biggest thing, making sure that they had all their ducks in line before actually even getting to the table and saying, hey, well, this is what we can offer you guys. And, it could be a little bit, intimidating at first for them. But, once we were able to get all that out, get all the details in, once you get your numbers and you see what your preliminary terms could be, you start really noticing what everything's going to come together like. And, luckily, what I do is I always provide them with a calculator so that they're able to see before they actually get their terms. Most of the time, they're going to be similarly the same or a little bit different once we have everything verified. But that was the biggest thing, them having to do all that homework in the front end to be ready to get that financing. Because if you have the money, if you have the deal that's makes sense and the numbers coordinate through the 75% ARV rule, which what does that mean? That's essentially meaning that your after repair value, you need to come in with the deal needs to stay under 75% of that, meaning that your purchase loan and your rehab budget needs to stay under 75% of your after repair value. And that's going to be the biggest thing whenever any hard money lender or investment bank is underwriting your file, that you stay under that 75%. So as long as you have the money, you stay under that 75% and your exit strategy is profitable and good, you're going to be in great shape to get funded. Now you better hope that the house doesn't have any crazy life altering things that doesn't allow you to actually build on it. But that's essentially what the process of underwriting looks like when you're getting these. So was there because the way you're describing it, it's like everything was peachy, perfect in this thing. I know it wasn't, but was there something that you think that's from this scenario that people can take away other than, because look, we talk about preparedness all the time, be prepared, ask questions based on the answers to those questions, put your stuff together, get your documentation cleaned up, whatever it might need to be to put yourself in the best position to win. Is there something you think that they could have done different to make this situation more smooth, easier, quicker? Because you're mentioning setting up an LLC. I know when you have to do that, yes, you got to get a bank account. Yes, you got to publicize that a new company has been opened. And then people, oh my gosh, I had to have this
this entity, and now I got to manage this entity. It's like, and it's just a holding company. It's for the thing. So, but I only feel that comfortable because I've done it.
Yeah.
Versus it's easier to say, easier said than done is the term, right? So is there anything here that you think could have been better?
I guess I could say maybe just, having your LLC done a lot sooner, but even in those regards, there's no time limit to how long it needs to be seasoned or anything like that. So I guess I'd go back to what they said initially, is that analysis by paralysis, because if you kind of understood what I'm saying, it's pretty accessible and pretty straightforward how you're going to get the financing. And as long as you have the assets, as long as you have the 75% and the exit strategy, you're going to get funded. And I think it's just more along the lines of committing, having the right people in your corner for your first time. I think that's going to be the biggest thing, actually having the confidence to, really say, okay, I'm going to do it. We're going to go full forth. And just having someone to mentor you for the first time is never going to hurt. So I feel that those are the biggest things when you're looking to make a move like this. I think everybody would love to get into real estate investment if they knew how, if they had a secure way of knowing that it's going to go well. I think that's the biggest thing, is just, having yourself aligned with people that are going to help you, get this done sooner rather than later. And then, maybe help you, not fall in some holes along the way.
Yeah, I mean, it's kind of, because it's one of those situations where, like, the criteria is the criteria. The house has to meet this certain ARV. The down payment has to be this. Okay, the purchase price is listed. You negotiate with your buyer and seller. You put concessions or no concessions. Like, you do the tango with both sides of the transaction. But I just really like that you're saying that, them taking a calculated risk that was within their tolerance limit. Was a key component to this, and the preparation. I think even having to do the LLC as part of the process is not that big of a deal.
No.
I think it sounds daunting because we go, LLC, that sounds super important.
You can get it done in 24 to 48 hours.
I know. We know that.
Yeah.
But I have to assume someone's seeing this for the first time, hearing this conversation for the first time, right? If you're not, great, congratulations. If you are, guess what? We can help you.
Yeah.
But I guess my point is, like, I like hearing these stories where people have a goal or they have a dream.
Yeah.
And they're, I want to do this, or I want to have this. And I love that we get to do this part of it. I think too often, more than not, and I've been seeing this more now than ever, and I just hope that we never suffer the same fate. I think in some aspects, in some regards, companies are getting better at marketing what they can do than actually doing what they do. And I know that right now we have struck a very, very good balance of being able to market and promote what we do so people can find solutions and answers to achieve that dream and that goal, and actually being good at doing that part too. And this is a great one for me when I take the 30,000 foot view of what you guys do all the time and how I'm involved in the development of the big picture long term, and even have these conversations. This just fits hand in glove, man.
And this is what I like to say, that this is what I signed up for. Like, these are the times that I'm like, dude, this is what I love doing. Like, this is a great freaking transaction. Like, it's very, very, I'm very fortunate to be able to work with great partners, great clients. And I guess to say on the flip side, one of the things that could have gone wrong on this is just if you didn't have your paperwork and stuff done on the beginning. But I just feel that once everybody has the same motivations, it's very easy to, work together to move to the same place and have everybody understand that, hey, this is what we're doing to get down, to the promised land.
Yeah.
So I was
awesome.
Very fortunate to work with them for the first time, and they're going to continue buying houses. They really like this. They said, hey, we're going to do this with the faith that everything's going to go smooth and we're going to be able to move forward. That's
awesome, man. Great. Another good story, dude. You're just like 3 weeks in a row, I think now. This is the third week in a row, isn't it?
Yeah, and I have another one next week, bro.
These no FUD. This is our. I think we're going to coin this like our summer no FUD series, right?
Yeah.
No fear, uncertainty, and doubt. People pressing ahead despite whatever obstacles might be facing them along the way.
Dude, and next week, I'll be talking about, another young military member. He's moving out to Oregon. Well, his family's moving out to Oregon. He's going to be staying here. He's purchasing a house. Was born in 2003. It's like they're getting only younger and younger. Last time was 2005. Jeez. So it's awesome, and I really have to give it to them. in other episodes, we would talk about Gen Z and how they would be moving and how they're working,
doing
and
it,
they're doing their thing.
Bro.
And it really shows the ones that I've talked to that have a plan. They know what they want to do. Like Colin, he's a past member, past case study that we talked about. He same thing. He's young. They know what they want. They're motivated. They're taking their calculated risks. They're calculating the risk and knowing exactly what they're getting themselves into, because they understand that buying a house or investing in real estate is not just that transaction. It's not just that purchase. It's stability and foundation for the years forward.
It's like a lot of other things, man. If you aren't in the arena competing with these people, you're out of the arena altogether. And these are the people you're contending with if you're still sitting on the sidelines hoping to get in and maybe someday do. You know what? This could be your time. And maybe it's not. I'm not going to try to compel you to push you over the fence if you're sitting on the fence. You need to make the right choice based on the calculated risk we were talking about today. But man, if you've been feeling driven and tugged in this direction and you feel like called to pursue this and do this well, do it. It's just like I almost get to a part where like my heart hurts for people that are still talking about it versus doing it, because it's like, man, success could be right there for you because we see it every single week. Another deal comes in, someone buys a house, someone refinances and gets themselves out of debt, someone invests and buys a home, someone PCS from San Diego goes to Tennessee, gets a second property in Arizona. And it's like, dude, these people are out here doing it. And half the internet right now is talking about real estate's terrible, and it's like, dude, maybe these people are all deaf to it because they're still out there killing it.
Yeah, and I mean, the thing is that I feel with the internet, you're going to always be able to find something that backs up your point and your beliefs. So I understand that. But for us that we see this day in and day out, we're actually in the trenches. We're seeing transactions happen. We're talking to people that do this every day for a living, not just, opinionate and share their perspective on what they believe is happening in the real estate market. I think there's a lot of opportunity, and each market will have its naysayers. Each market will have its doubters, but then you'll have the people that are doing it. You have the people that stay consistent, and you'll have the people that will find what they want regardless of whatever the market is. That's who this market is for, the people that are resilient. And if you don't think this is a good time to buy, the great thing is you don't have to, and it's no one's forcing you.
That's right.
So you can continue to see the train pass you by. I don't know how many times, but that's a decision you make. And hey, I respect that. Everybody has their time. I just feel that for those that do have the motivation and do have the courage to put, themselves in these types of positions, they're only going to show how successful it is years down the line because they took this decision right now. Yeah. It's also a time investment as much as it is a financial investment.
Yeah. No, dude, this is great, Brian. Thanks again for another no FUD case study, man. This is so cool. I love hearing these things. We've spent a long time talking about all the other market aspects, but I've really enjoyed this summer taking time to talk about real life examples of people winning, getting keys, getting an investment property, moving up, moving sideways, moving out, moving in.
Yeah.
I'm so excited, man. So thank you for another great case study today. Thanks for another great show, dude.
Thank you.
I said brood. Good job, brood.
Thanks, Brood. No, thank you for listening, Andy. I appreciate it.
Yeah. Thank you all for watching. Again, if you have not yet subscribed to the channel, make sure you hit that subscribe button, like this video, forward it to someone else who's maybe been kicking around, kicking the tires of being a real estate investor. Have them call Brian. Talk to Brian about this exact video or this case study. All the parameters and criteria to be a real estate investor, they're already out there. Everyone knows about them. But, lock arms with someone who you yourself can trust and can carry you across the finish line. So, Brian, good job today. Thank you for being here and being ready. Thank you all for watching. And I think that's it, man. Yeah. We'll see y'all next week. Bye.
See you guys.
If you like this video and like to subscribe, click here. And if you want to watch other videos, click here.